Hedge funds are getting vaporized out there, and the ones that have not got vaporized already are in some serious trouble. Some businesses as well are not in such a great place. So I want to talk about how the vaporization of hedge funds as well as other large bankruptcies are going to play into, one, how the markets react and what is going to happen here in the short and midterm, but also how it directly pertains to AMC stock. So that is the concept here in this video. Hit that like button, subscribe to the channel if you guys have not checked out the sponsor of this video. It is Moo. When you sign up and deposit $100, you will get 7 free stocks. This offer does expire June 30th at 11:59 p.m. Eastern Standard Time, so make sure you guys sign up for that and get yourself that free money. That is the best promotion here at all. You will not find a better promotion to sign up to a new brokerage. So that is essentially free money. Now, enough with that. Let's get into it. If you guys want access to all of my trades in real time, link down below in the pinned comment. It's very exciting right now. We have been making a killing trying to keep the portfolios green. We're very long biased. I don't like to have a lot of short positions or even puts, but when you do get those nice trading opportunities, you can get a 500 or 1,000% winning trade on some puts. It helps to balance out your portfolio, so then once you do ultimately see a bounce in the markets, your long positions can put in some work for you. Now, nonetheless, let's talk about the situation, because hedge funds are getting vaporized. Somebody got vaporized. Let's put this out here. Somebody over this weekend, especially in the crypto space, has gotten absolutely vaporized. Let's not forget that. Crypto is up a little bit today, about 10.78% in the past 24 hours. But look at the prices, guys. Ethereum is only at $1,000. $1,000. So when you see 11.5% up for Ethereum, but the price of Ethereum has dropped so much, now only at $1,000, that 11% really means a lot less because it's a lot smaller of an actual dollar amount. So the situation here, even though today is green, it's still in the toilet. Bitcoin under 20,000, sitting at 19,608. Now, if you guys have not heard that clip from Kevin OLeary a couple of weeks ago, I will go ahead and play it in just a second and give you guys my commentary after that, and then we'll get into the data, the numbers behind some of these hedge funds and how bad of a situation they are in. Really, it's not good for the hedge fund industry as well as for other businesses, which we'll get into that and talk about how that pertains to AMC in 1 second. But let's roll the clip and give you guys my commentary on it.
What I want is a big event, a big 3,000 point down day when a hedge fund blows up, or in this cycle, maybe a Bitcoin company goes to zero. Somebody's in trouble right now, somebody huge, over-levered probably, we don't know who they are. But if you look back at great bottoms, it's always on a day of absolute chaos because somebody goes to zero. I want that. I'd like to sacrifice somebody, not me, of course, but somebody, and I'm not levered, but somebody out there is, and they're going to zero, and that will be our bottom. But we're nowhere near that yet. This slow grind down is painful, and it will continue.
So what happened to the Kevin OLeary who on May 6th was with me and said, quote, the slowdown's not evident. There's going to be no recession this year. A buyer of Chevron, DuPont, Cigna, Moderna, United Health, Home Depot, Apple, J&J, P&G, Pfizer, Alibaba, Tencent, and was looking to add to Facebook. Where'd he go? Where'd Mr. Wonderful turn into Mr. Awful? What happened?
Wait a second. 2 out of 3 are still true. The consumer is not rolled over yet. I think there's a 0 chance of recession, but that doesn't mean PEs can't get compressed. And having seen slow grinds down before, and I'm not the only person that's lived through this multiple times, is I go back to what I just said. We need capitulation. We haven't had it yet. Capitulation is not a 1,000 point down day. It's something catastrophic that makes everybody believe it's the end of the free world as we know it. And from there, we can build it back. There are great deals out there. There's no question some of these tech companies are trading at absolutely once-in-a-lifetime opportunity prices, but it doesn't mean we're at the bottom. This is something that's very difficult to judge. I'd argue that we're 2/3 of the way there, but another third to go, and we need some event to make it happen. Please, let's flush the toilet, but let's do it soon.
Now, why I think that is actually so interesting is because who Kevin OLeary is, and bear with me for a second. If there is anyone that knows what is going on in the crypto space, venture capital space, or public markets that know people that know people that have connections. It's Kevin OLeary, and he was essentially telling people that there is some bad things to come. And what we have seen in the crypto markets since that video was actually put out there, and once Kevin OLeary actually said that about 4 weeks ago, is nothing but absolute carnage. You have seen Revlon, one of the first big businesses that has declared bankruptcy, the next day finding a buyer, which was good, but that's probably only the tip of the iceberg. Think about it. Think about Titanic, right? You see a little bit at the top, but really the whole thing is under the surface, and it's going to slowly start appearing, and you're slowly going to see more businesses actually going under, and that is something that is going to really hurt the markets in a big way. And I think crypto is really the first domino to fall because of what happened with Terra Luna, right? The lack of trust in crypto markets has really led people to get the hell out. Right? If there was one asset class that you are going to GTFO out of, it's going to be crypto first, because you don't know what is going on under the surface with crypto. It's like hitting an iceberg where you don't see the top. It's all underwater. It's the lack of transparency, the lack of governance in crypto. Yeah, it's a great thing in great markets, but it's going to be an even worse thing in bad markets. So somebody for a fact got absolutely decimated and got liquidated over this weekend, and that is why crypto has fallen so much over the past 7 days. Bitcoin down about 30%, Ethereum down about 30% as well. Now, what you're also seeing out of hedge funds is that the long exposure is at its lowest levels we have seen ever in the history of the stock market, meaning hedge funds that are investing in the stock market do not want to be long equities as of right now, and you have seen the most furious selling ever in the history of the stock market in the last 2 days. This article was posted June 14th, so a couple days ago, but last week overall was the most aggressive selling that we have seen in the history of the stock market. At the same time, Goldman data shows clients are boosting short sales aggressively. Now, at this point, why would you boost short sales aggressively? Why would you actively go out and try to buy insurance once the big market crash essentially has already happened? The NASDAQ, after all, is down over 31.5%, 31.61% year to date. Why would you go out and buy insurance on your portfolio after you are already seeing a 31.5% decline in 6 months, when we are obviously a lot closer to a bottom than to a top? I will tell you right now, it is a last-ditch effort to save your hedge fund. Mathematically speaking, if you can go out and spend, say, 5% of your portfolio, whatever it is, to protect 50% of your portfolio, that's what you have to do. Right now, there is obviously a much better risk to reward profile going long equities at this moment, unless you are on the verge of bankruptcy, unless you are on the verge of vaporization. Think about it like this. If you guys right now, where you sit, I know your hedge fund, your portfolio is beaten into the ground. That's probably a gross underestimate of what is actually going on. My personal portfolio is down like 60-some%. It's not good. Now, if I was over leveraged, what would I have had to do? Right? Before you get that margin call, before you get forcefully liquidated, I would have to go out and buy a lot of insurance on my portfolio to essentially, play that downside and to not lose any more money. So that is ultimately what options are for. And to see this kind of activity when the markets are down 31.5% in 6 months is not usual. And to see this aggressive selling at the bottom is indicative of margin calls. You are certainly seeing margin calls on a massive degree, right? But what has actually happened with the margin debt overall? It really hasn't went down that much. April of 2022, the margin debt was at about $772 billion. As of May, the last reading we just received, the margin debt was still at $753 billion. So the margin debt is essentially still very high, and equity values are down in the toilets. That means if you even see another 5 or 10% decline in the markets, you're going to start seeing massive rounds of liquidations, even with some very large hedge funds at the current moment that are not doing good at all. Not just crypto hedge funds, but well-known hedge funds like Tiger Global, down 52% in 2022. That didn't even happen in COVID times, during the COVID crash. That didn't even happen to that degree during 2008. It was one of those situations where you were either holding bad assets or you were not. You either went bankrupt or you did not. Right now, you're just seeing a lot of hedge funds on the verge of vaporization, a lot of hedge funds that are on the verge of going bankrupt. At the same time, you are seeing a lot of withdrawals that essentially people like you and me are trying to get out of these hedge funds because they are in such a bad overall situation. And I want to look to the crypto markets specifically right now over the next couple of days to see how bad the situation is, because crypto is going to be the first asset class that does get destroyed before you actually see businesses go bankrupt, before you actually see hedge funds going bankrupt. Those hedge funds are going to get out of their crypto bets before anything else. So I think the overall situation is not good here. And I hope you guys can see it for what it is. We are literally on the verge of seeing bankruptcy after bankruptcy after bankruptcy. Add in some hedge fund bankruptcies in there, and it's just overall not a good situation for the broad markets. But for AMC stock specifically, what does that do? Well, if you're a hedge fund that goes bankrupt and you do have a short position on AMC, yes, indeed, you have to cover on that short position. Likely why AMC was up 6.28% as of Friday. But at the same time, even when you see, hedge funds going bankrupt, if they don't have short positions on AMC, it will likely help to drive up the cost to borrow rates. It will likely make equities seem more risky, thus driving up the lending rates for these so-called securities. And it's really going to cause a lot of broker dealers as well as the DTCC and SEC to really start to demand more margin, and that is going to help break the camel's back in an even bigger way. And to be quite honest right now, I don't think there's any shares left to even short in AMC stock. That's going to be a video that is coming later on today. But when you boil this all down, it is a bullish thing for AMC. It is a quite bearish thing for the overall markets. But like Kevin O'Leary said, once you do get those bankruptcies out the way, you can start to see a slow and steady recovery back to the upside. But Kevin O'Leary is talking about a 3,000 point down day for the Dow. That's a 10% drop for the Dow in a day, essentially. That would be a circuit breaker. When the markets fall over 7% on any index, they do halt the markets for 15 minutes. Very exciting and actually historical. If you did not live through the COVID market halts, that was wild. We actually got 2 of them in one day. Markets dropped 7%. It gets halted for 15 minutes. If the markets drop to 13%, you get halted for 15 minutes again. If the markets drop 20%, the markets close for the rest of the day. We actually hit 2 of those in one day during COVID when the Dow, NASDAQ, and the S&P did drop under 13% for one trading day. And that's ultimately when the bottom is going to happen. And it is coming, ladies and gentlemen. So just be ready for that. Hedge funds are currently getting vaporized. Some of them, and the other ones, they're not in a good situation overall. So that is going to be all for this video. Let me know what your thoughts are on this whole situation. How do you think crypto plays into the whole equation with hedge funds? I would love to hear your guys' thoughts on that, because after all, I'm not perfect, but that is what I'm looking at. And I think that's the biggest thing that we can actually look at here, even on this extended weekend. Nonetheless, happy Father's Day to all of the fathers out there. Enjoy your time with your kiddos. But yeah, I would definitely tighten up the balance sheet. get ready to do some serious buying. This is a once-in-a-lifetime buying opportunity, and what would be a better gift to your kids than really solidifying your financial future during these very, very scary and tough times here in the markets. Very exciting. If you guys want to come join the journey with us, get access to all of the stocks that I am buying when I buy them, as well as all of the options to help hedge out the portfolio and to ultimately put us in a better place months and years down the line, come join us. We would love to have you over there. Link down below in the description of this video. Thank you guys for watching, and I will see you in the next one.